Good afternoon, everybody. Welcome to today's live market update and charts of the day for today. Fantastic to see you here. I hope you've had a good Thursday so far. Many thanks to those of you who were able to pop into Inner Circle last night. Of course, thank you very much for all the messages coming through already. I can see it's very kind. But as we start, just a reminder to do your own due diligence on anything you see here. Make sure you follow trading plans. Make sure that you manage risk on every trading action. That's on entry and exit, consistent with your own personal trading objectives and financial situation. Thank you for the heads up on the AV as well. Good day to Hugh and Brian and Wayne. You're all very welcome. And those others of you that are in the chat box as well. Right, okay, let's check out some headlines, and then we'll have a little look around, and then we'll have a check out of some charts as well, as we usually do. So let's do that. So if we look at what happened prior to the US close, markets were generally flat. This is on the back of the expected Fed pause. There was a 97% chance that they were going to pause. And really what markets were looking at was clues as to whether the expectations around March, April, and June change at all. Of course, June is the month which did show that there was about a 50-50 likelihood of a rate pause in June. Interestingly, that sort of coincided with Jerome Powell moving. And then, of course, we got three big tech stocks reporting after the bell, with Microsoft and Tesla, all giving us their numbers. Microsoft was very weak, down about 6% in after-hours trading. Meta was completely the opposite. Great numbers, good forward guidance. And Tesla, although they reported car sales which weren't particularly strong, the other elements of their business did fairly well. Today we've got Apple reporting in again after the bell tonight, amongst many other of the industrials. Middle East geopolitics are back on watch again. Trump was waxing lyrical about the armada he's sent to the Middle East. So again, that if we just wind the clock back a little while, it all sort of merges into one a little bit sometimes, doesn't it? But he was suggesting that would happen. There was talk, well, if Iran don't come to the party within a couple of weeks, we might have something to say about it. And so yeah, the fact that it's been talked about again is interesting. Just keep an eye on that. G'day, Roger. How are you, mate? Good to see you. So consequently, with all of that after-hours action, US futures are pretty neutral in early Asian trading. Asian markets are mixed at this stage. The ASX is underperforming, down 0.8%, which is sort of interesting because materials or underlying metals are doing quite well. European futures are indicating a probable cautious start later today. Good day, Neil. Thank you. Hi to you as well. The US dollar has looked increasingly bearish over the last few days, but appears to have paused on support. Gold continues to surge up another 3% yesterday, somewhat remarkably. Moved through 5,000, which theoretically should have been a very key psychological number, like butter, and currently sits around 5,600. Copper edged towards the top of the current range and all breached resistance to hit level not seen since September. Bitcoin still remains a little soft. On the data front, US weekly jobs and trade balance of the data highlights today. Tomorrow we've got month-on-month US PPI, CPI out of Japan and Eurozone. Flash GDP, both out of Eurozone as a whole and Germany, which are all interesting. Interesting to see how the tariffs are impacting on US trade balance, if at all. Let's just have a little flick around to put a little meat around those bones. Let's start with looking at what happened last night. You can see there slight gains in the Nasdaq and the Dow, and the S&P 500 as near neutral as makes no difference. Big tech outperformed during the session. with Nvidia shining brightly. Semiconductors are doing very well. See Micron and Intel both to the upside, Texas as well. Right, those futures are actually slightly worse than they were a little while ago when I looked. So slightly to the downside. You can see the flat European futures. More money coming into commodities. We can see oil, gold, and copper futures all to the upside. If we look at FX futures, that's the reason why we've seen a little bit of a drop off in the USD. The Aussie's still strong. The expectations may be changing to more likely favor. It was around about 50-50 to more likely favor an RBA rate hike from tomorrow. So we'll see what happens with that. Sorry, next week on 3rd of February, I think. Right, okay, onto the data front. So moving back from today, you can see here that if we look at that CPI number, this is why I'm thinking the RBA may raise rates. That CPI number is worse than expected by about 0.4, and so you can see there that it's ticked upwards again. That, on as well as the strong jobs data, probably gives a green light to the RBA. In fact, let's have a quick look at the RBA rate tracker. It shifted since yesterday. Oh, that's a big change. So as I said, slightly tilting towards a rate hike by back up to 3.85%. But you can see that CPI number is virtually has really stacked the odds in the favor of a rate hike. That's I figured that might be the case, which I mentioned in last night's Inner Circle before those numbers. Those numbers are sort of updated at the beginning of the trading day from the previous day's action. Let's just have a look at the Fed watch on the back of Jerome Powell's press conference. You can see there March essentially 86% no movement. Still 3/4 of a chance it'll pause in April, and if we look at June, that's where it changes a little bit. Those have hardly shifted at all. Now there's some even pricing in a full 0.75%, maybe reflecting a potential new Fed chair at that stage. But we can look at these. They're virtually not changed in the last week or so in terms of percentage. Weakest maybe ticked up slightly, but nothing earth-shattering. I saw that, Roger. Thank you very much. G'day, Mark. To respond to your email. Right, okay, let's just check out what's happening in Asia right now. You can see there that the Nikkei is the only major index in the green. Shanghai is pretty neutral. Hasn't been open about 25 minutes or so. ASX is off its lows, but let's just have a quick check-in on the ASX in a bit more detail. So you can see we sort of dropped down in the first hour and a half, but since then we've been sort of trading within a range. We just have a quick look at the sector split on the ASX. Then they're all but one are in negative territory, with the exception of energy, and that's not surprising. As we already stated, the oil price has moved to the upside. Let's start with that and look at a chart. You can see there's that 200 MA, importantly, on that level around about 62.60 that we talked about previously. Has been a level to watch. That's what happened yesterday. So we breached both the 200 MA and that key level, and you can see it's just following through in Asia. And continuing to do so. This is the highest level since here towards the back of September. So that candle there is the 26th of September. So the highest since then. So what's it, 4 months? 4-month highs on oil. That's Donald Trump's maybe one of his claims to fame during the last year has been what's happened to oil price. That's going to send things back up. Oil must be up around about 15%, let's guess. I think it's lower hit in December. Yeah, 15.9%. Yeah, coming from energy. Yeah. So that's oil. Let's just roll it back. Just have a look at the indices. Let's have a look at the S&P 500. So despite that, this is the futures, of course, that takes into account those tech earnings. So you can just see we were at record highs. It's been a good week generally for US stocks, possibly anticipating a good earnings from the big tech companies, but you can just see that pull back a little bit. That's going on there in today's session. You can see the action there on this candle, and then subsequently the drop off as markets process Microsoft's numbers versus Meta. Since then, we've sort of been in a reasonably tight range. If we look at something like the 20-minute chart, you can just sort of see there. That's not going very fast. Good day, David. Hope you're well. Right, okay, on to the US dollar daily. We've been talked about this a bit last night, and that breach of 96 was really technically important. Why was it so? Because that was a low not seen since February 2022, so almost 4-year lows on oil. The fact we've had a bounce is not unusual, so this could be a retest and then further selling perhaps. Or indeed, there may be some profit taken sufficient to take it back into this range here, but whichever way you slice it, it remains bearish. And we're seeing that in all of the USD crosses, of course, as well. And then, of course, one of the beneficiaries of that, no, you're absolutely right, Roger, higher oil won't help inflation. So here's gold. So even since if we just take it back to the beginning of January, just to show you. So since the beginning of January, gold is up 27%. It's a remarkable surge to the upside, hardly pausing on the way. We say that prices don't tend to move in straight lines. That has been as near a straight line as you ever will get once it breached 4636. And to be fair, if the US dollar keeps getting weaker and the geopolitical situation escalates in any way, shape, or form, then more buying into gold is not an unreasonable result from that. Obviously, we are expecting some profit taken at some stage, so be careful. But at this stage, it's just going nuts. Now, gold isn't the only metal doing well. If we look at copper, you can see copper's had a fairly good week after this double top, which didn't eventuate and breach this 578 level. You can see the multi-week test of that level. Since then, we've had a choppy ride to the upside, just sitting under $6 at the moment. The previous record high is there from the 14th and 15th of January. So it's only a couple of weeks ago. So retest of that level looks as though it could be on the cards. We're a bit flat today. You can see there very choppy early trading, long wicks on these candles, which make it feel as though it may be repositioning rather than a strong technical move either way. And let's just check out Bitcoin, which has managed to hold this support at around about 85,660. If we just bring this in so you can see it slightly better, you can see there's the bounce off that level that we touched mid-December and mid-November, essentially. So are we to expect that it might crawl back up to here? Well, I'm not sure we can expect that. There is a key level on the shorter time frame for those of you who might be interested in trading cryptos, just keep an eye on around about 9,500. You can see there was multi-tests. Look on the 21st, 22nd, one on the 23rd. Some tests of it yesterday. So that appears to be a market structure level that the markets are now watching on the shorter time frames. Should it breach that, then the next pause point isn't actually that far ahead. So I'm not enthused about this, and this still looks down to me. It looks more likely to come down and potentially retest this sort of 87,250. Fantastic, Simon. Look forward to that. So that's where the major commodities are. Let's have a little bit of a look at some of the crosses. Let's start with maybe US yen. Obviously, we're seeing this US weakness that's been in place for the majority of this week. Slight bounce yesterday, looks weakness again. Using the 200 MA as a support at this stage. But again, we're looking at levels not seen since October. Back here. Key level on this is sort of a bit interesting. Part of the US dollar weakness is perhaps due to a policy change that has been intimated out of Japan in terms of what they're going to buy. They're looking to buy Japanese bonds and cash in some US, was the market narrative. So yeah, but that 200 MA is important. But if we do breach that, then if there's sufficient selling pressure, it could make its way down here. Upside maybe gets up to around about 155 if some buyers come back in. The Aussie is obviously where it's at. We've talked regularly about the strength in the Aussie, and you can see, let me just get rid of those extra lines. You can see those, you can see that sort of key level all the way here in January last year, so a year ago. So lows not seen since for a year on a GB pound Aussie, but you can see that test there of that. Not surprisingly, it was a fairly substantial level, and if you take it back even further, you can see quite a lot of price consolidation around this level. So this sort of 196 level looks really technically important. But in today's trading, after yesterday closing beneath that, and almost right bang smack on the 196 level, and 6 fractional pips beneath that, so finished above that. Sorry, 196.006 was where it closed last night. But Asian trading, we're seeing a bit of buying come back in. That could be profit taken at this stage. Volume's not jumping up and down. Neither is it too bad either. But this, to the upside, at best, it possibly looks technically as though it might get stuck in this area here. So a retest of this level is certainly not beyond the realms of possibility. Let's just check out the Euro USD, as that's got interesting price action. You can see the rally there in yesterday's trading, but generally speaking, that strengthened the euro because of the weakness in the USD on this. Profit taking yesterday. Next move is what it's all about. So may keep an eye on 120.35 to the upside, 118.31 to the downside. Because of the strength of that, there could be quite a consolidation within this range, and you might end up sort of thinking, well, 119 is a nice round number. So you might move the support up there, but you wouldn't. That doesn't look particularly tradable until it breaches sort of 118.40. So just keep an eye on that. But at this stage, the best you can say about that technically is it's mid-range. On the shorter time frames, with a most definite uptrend to breaching 119. You can see the 200 EMA is looking up. Most of the other EMAs are pointing up, so that's evidence of buying pressure. And you can see this high volume on that move as well, which is sort of evidence of participation. So At this stage, that's why I'm sort of assuming that this pullback here is possibly a bit of profit taken after that significant move up of around about 450 pips, and to only get a 15% retracement on that is certainly no signs of a reversal at this stage. So either way, it's worthwhile being patient on most of the things that we have had a look at. Let's just check out some ASX stock as we go. Let's see what we can find. So this is what the ASX looks like today. As I said, of a bit of a mixed bag. Some money coming out of uranium stocks and some of the material stocks, but that's generally across the board. You can see the banks are doing quite well. If we look at Macquarie, for example, you can see Macquarie's now breached its 200 MA. Did this a couple of days ago. This looks like an important level here at around about 215, but so that's possibly worth keeping on your radar to see how that sort of looks over the next coming days. Whitehaven coal continues to fly higher, and if I was to have a chart of the day on ASX, this would be the one to keep on my radar, but it's always worthwhile checking the longer time frame to see where this might move to. So if we look at the weekly chart, there could be a pause around about 10.12 if this buying continues. Worthwhile maybe checking on this towards the back end of the trading day and see if it's holding. But once again, we're seeing a really nice pop-up in this of around about, is that about 4% for the day? My maths sort of been, oh no, not quite that. Just a little, around about 3% for the day on Whitehaven. So that's a very significant move. This is a little good lesson. If you were looking at something like this, you've got to. So what we would do is we'd sort of say, right, that looks like a logical area there to put the stop in. That's around about 5.8% down. The upside is about 7%. So the reward is slightly favorable compared to risk, but only slightly so. If we're taking that as our next line up, so just a little side deviation from that. But I like Whitehaven coal. It's had a coal appears to be back being talked about. Interestingly, deep yellow, you know, the uranium stock are going very well, whereas Paladin and paused. So there you can see deep yellow there. There's a 242 level that looked important because that was highs that we saw, a swing high that we saw back in mid-October. The fact that we breached that looks important. If we look on the weekly chart for context, or the monthly chart, you can see there. Now those charts only go back, don't quite go back there. So I'm just going to flip to trading view very quickly. And let's do stocks. Let's do DYL and see if we can find that. There we go. Just want a longer time frame on deep yellow, just to make sure that it is as good as it looks. Let's pop it on the weekly chart. Yeah, it's still looking really good. I know the Japanese are talking about up in the nuclear power stuff again, but you have to go all the way back. 2012 when it was last at this level. So really hard to gauge that, but it's certainly come out of the doldrums that it was in. For almost 5 years, it was in a very tight trading range towards the bottom of this, around about 40 cents. It's obviously done significantly well since then. So there's a few technical landmarks that might be worth just keeping an eye on. Certainly $3 is going to be interesting just simply because it's a nice round number. On the monthly chart, maybe 390 in the medium term, but it's very difficult to make decisions technically on a monthly chart. So if you are interested in that, it's probably worthwhile going back on a daily chart using something like TradingView to go and have a look and see where it's, get a little bit of detail from the daily chart. But the monthly chart gives you sort of reference as to where to have a look for that. Hope that makes sense. Right, okay, so let's just check out the US. We should get some extended hours action on this, but I just wanted to put MU, which is one of the stocks that I've been sort of quite keen on. We've talked before about this stock in the semiconductor space. That beach of 400 looked technically interesting, record highs on this. Let's just check out Microsoft and see how that's been hurt. Down 6% in after hours trading, so no breach of the 200 MA, no tackle of that key 500 level. In fact, we look more likely to test this 443 level. You can see there that would be lows not seen since what's that, May last year. So about 9-month lows on Microsoft. Whereas if we look at Meta, which we may not have on here, but let's put it in anyway. There we go. There's the jump through the 200 MA back into this range here. Be interesting to see how this responds on actual market open. So this is the extended hours trading you can do with Go. So there's where it closed. There's the 6% jump. You can see it's off its highs. In fact, it's at the low of the extended hours session. But that's not surprising. A little bit of profit taken on that massive candle that we got in after hours. You can see there, these are the period separators. So that was the end of the trading day. There's that last hour. We often get a move in big tech after the equity markets have closed. It's really important to take that into account if you're trading NASDAQ futures, whenever there's big tech reporting. So a little bit of profit taking going on, but again, in terms of retracement, that's hardly noteworthy. So it'll be interesting to see what happens on open this evening, whether we can sort of push back up towards these levels that we hit in August and September. You'll get a clue in pre-market, probably a couple of hours before market open in the US, as to what may happen. Also extended hours CFDs are open as well, of course, at that stage. And let's have a look at Tesla. Well, as I said, their car sales weren't particularly earth-shatteringly good. There's extended hours trading, which has essentially confirmed this range that it's in, between around about 424 or 420 and 450. There's record highs again near that intraday test of almost 500. So one wonders whether there's enough in some of their other businesses that's going to excite markets. Certainly there's evidence of, in terms of their robo-taxis, etc., that would be positive along that lines. Go and do a deeper dive of Tesla earnings, and it'll give you the lowdown. Just type Tesla earnings in Google, and it'll give you the latest thoughts on that result. When last I looked, it was up around about 1%. Yeah, 1% in after hours. %. It's actually moved slightly to the upside from when I looked at it about down here. So although profits have been hit high revenue. Okay, so it's the AI stuff that looks as though it's going to help. Although revenue was a decline, it actually beat expectations, so it wasn't as bad. But you can see the AI stuff looks as though it was always the way that Tesla, the fingers in other pies were more likely to be longer term what the market would turn to in the long term. More focus on robots, I agree. And discontinuing some of the car stunts, and yeah, I saw that too. So let's call it a day of that. I hope that's been interesting, useful, giving you a few things to have a look at. There's quite a few that are at key levels, but remember, not only may a key level be breached, but it may be bounced off. So make sure you follow trading plans. I will see you sometime soon on some webinar somewhere. But most importantly, enjoy the rest of your Thursday. I hope it's a great one. I'll love and leave you. Take care. Trade safe. Bye-bye for now. Thanks. Cheers, Dave. Thanks, Simon. Thanks, everybody. See you soon.